Hello everyone, welcome to this quick market update from LCG over YouTube. So today the main topic of discussion is the Chinese yuan. It's just jumped through the key psychological barrier of 7 against the US dollar, and it's reverberating across markets. The yuan has been a bit of a telltale sign in terms of general market volatility since there was a big yuan crash, if you remember, in 2015. But now, obviously, because of the trade war, this is being seen as tit for tat from China. Trump last week added extra 10% on tariffs and another $300 billion worth of Chinese goods. China looked to be responding to the trade war via a currency war. So if you see the LCG trader platform behind me, you can see these are the huge moves that we're seeing in the yuan right now. It kicked off last week and we've seen it follow through today. Just look at these other candlesticks. You know, this is more like the typical volatility you expect to see. These huge moves, especially today's, is obviously uncharacteristic and symbolic, a bit of a game changer. Now, if I scroll out on the chart a little bit here, you can kind of see why this level's been significant. Here you can see these peaks over in 2016 and you can see various drops in the yuan, and this has really been the major resistance area. So it was actually 6.98, if we're being pedantic about it, was the level that had specifically halted the rise on a couple of occasions, but really that was just ahead of the 7 level. We blasted through the 7 level today. And so now we've gone all the way up to 7.1. Now that key level is out of the way. The question here is, do you think the People's Bank of China, which is the central bank of China, do you think that they are now going to basically allow the Chinese yuan to weaken? So on this chart, we see the dollar rise against the Chinese yuan. Are they just going to allow that, or are they going to step in and manipulate the currency back stronger again to prevent large amounts of volatility? I tend to think that yes, they may try and clamp down on the volatility a bit, but they've pretty much said that a yuan valued below $7 a barrel, $7 is acceptable now. So my base case scenario is that 7 holds, and if that's the case, you can see on the chart here we've hit 7.1. Maybe we get the chance at a pullback into the zone between 7.05 and 7. I would suspect not much further past 7.05 before we get a chance at the next big leg up, potentially as high as 7.25 in the yuan. 7.25, the kind of target institutions might aim for now that this 7 barrier has gone. So look at a momentum trade here, and you can see that momentum has been in the favor of dollar strength for a while. We had the Fed rate cut, that didn't do anything. Now we've got the PBOC acting on behalf of a weaker yuan. All the fundamentals and the technicals are lined up for a further move higher. The only thing that would probably tell us that isn't the case, and maybe the PBOC do decide that, okay, this is getting all the headlines, we don't want the yuan at 7 and above, so we're going to clamp it back down. So a price move back below 6.98 and the momentum trade no longer works. Okay, thank you very much for watching. Jasper signing out.